Hello again, traders. Right, I'm sat here with a coffee, so I thought I might as well make a video. I'm not going to trade this now, but this is interesting. Again, something I don't mention very often, but if we zoom out a bit, you've got a new 5 minute potential trade happening. We've pushed up through the 89 EMA, pulled back, and had an ABC reversal, if you like, after your strong move up. And what's interesting, I just noticed this, you're looking at this chart here and you're looking at the momentum, and this says to me momentum is desperately falling off here on this 5 minute chart, and a bit of a iffy looking, to be honest with you, pullback with a flat curve, and we're past 9 a.m. We're in fact we're 1 minute before 9:30. New candle. That would be interesting to see what the 30-minute candle is doing on momentum wise. There it is there. So increased momentum. Let's have a look at the 15. This is how I do my momentum analysis, as it were. We've got a vol bomb there that I hadn't noticed until I've literally just opened H1. Difference between a huge red candle or bar and a small green one. And M30, back to that. M30 should be closing any second now, but M15 likewise will be closing. So M15 isn't perfect as it stands, which replicates or mirrors the M30, M5 chart. Momentum is falling off. Unlike at this point, momentum is nice and strong. But once again, looking to the left, you can see what you should be looking for. So let's have a look at that one from the other day. See the difference there. Okay, we've come down, tested, we've reversed, and we've got rising 15-minute momentum, as opposed to in a strong reversal. Difference between this one, we're above the 89, we're above the 34, so we're not above the 89, we're not above the 34 properly yet, but I've drawn a level on the top of that on the 15-minute, because look how that looks so different than the 5-minute. That's just one swing now, and we're making a new potentially downswing, which will look like an ABC reversal on the 15-minute. Now that would actually be sensible, because we are now outside of the real strong momentum time. This might be sideways now till the US Open, or in particular, I think the stock market open will make a difference. But once again, moving over from the left-hand side, you can see we've got clear a resistance level there. I'll highlight it so we know where we are. Whoops. There we are, highlighted. Excuse me. So we've closed above that. We're using that as potential support now. This could go either way, as I've just said. A flip to the candle chart, we should really wait for an M15 bar to close, possibly or potentially with momentum. As it stands, we don't need a 3CR on M15 because we haven't 3CR down, 3 candle reversal down. But we would want to keep an eye on M5 because we have 3 candle reverse down. So we really need a 3 candle reversal up, because remember, before the RSI histo, I didn't have anything but sort of nested 3 candle reversals to keep an eye on which way I should be trading. Categorically, I wouldn't have considered this long unless we had cancelled out this 3 candle reversal with a new M5 one up. But now we've moved slightly forward with the momentum triggers and also breaks of line charts. We can slightly bend those 3 candle reversal rules, but as a guide, I was going to say as a rule, as a guide, they are priceless. So there we go. I'm looking for a potential long. I don't want to trade it. I'm not going to trade it now. I've had 3 trades, 3 winners. I'm happy with that. That's more than 3 days work, to be honest with you. Couple more trades. if they land in my lap, and I'll have finished a week's work, to be honest with you. So you can't. And one important thing I keep forgetting to mention, really really good point Billy TT made, is that the more trades you make, really all you're doing is building up credit, if you like, in your trading account to cover your losses. So, 3, 5, 10, 7 or 8 pip trades, and one 20 pip loss or a 25 pip loss if you're trading something. Gold is a bit different. You need slightly larger. Reduce your trade size and increase your stop size to about 40-45 pips. I generally say about 20% of, as an easy calculator, 20% of the daily range. So euro might move 70 pips, so 20% is 15. Add a 5 for spread and safety, that's the 20 pips. Gold, we've got 180 pip current 5-day average, so 20 of that is 40, 45, 36. Add a bit spread and add a bit more for safety. Those are safety stops. What you use is actual support and resistance stops. Anyway, this wasn't meant to be about stop losses and things like that, but it's all on my YouTube channel, and you learn how to search the YouTube channels, my channel, and learn how to search Twitter to find everything, my Twitter feed, as it were, to find everything you need, because I can guarantee you every question you might want to ask has been answered 1,000, well, not 1,000, but 100 times before. Anyway, off topic again. I'm going to pause this for a little while, see whether it goes up or down, come back and just give you a quick update. Okay, so I've just been asked another question on Twitter, and it's a very good question from Katie. So rather than mess around waiting for this to do anything, I'll kill two birds with one stone. So Katie asked about waiting for H1, M30, M15 reversals to catch that bounce trade off of this supply area. And the proper answer is, in the old days when I relied just on 3 candle reversals, yes, absolutely. But there's so many different things involved now. We're using the RSI with 3CRs and clear supply and demand at levels. In other words, sellers being overwhelmed by the buyers, drawing the level, that blue level there. Sorry for all the mess on this chart again, but it's my analysis, and it's the level that I do these things at. But there's so many things to be taken into account, and you need to, there's no other option than screen time. All you can do is say, right, I know I've got a level of demand down here. We talked about that on the M15 charts. I know where price was aiming for down here. So any bounce that has multiple boxes ticked, and I've, can't emphasize enough how building a plan, because that's all it is, a trade plan. Building a plan, having your boxes, making sure you're dotting your I's and crossing your T's, or ticking your boxes, or whatever you want to call it, and then applying that knowledge and using the 3 candle reversals. Look, we've got a 5-minute, well, we've got a 15-minute 3 candle reversal on there. So as I said in a tweet, the reversal, the change of balance between buyers and sellers, is what a reversal is telling you. It's telling you they've come up, they've come back and tested, because we know a 3CR, once it breaks or triggers, it will come back and test. They will test. They fail to find any more buyers in this sellers in this instance, and price will go up. And it will be fast, because we're in the middle of the London stroke Frankfurt, or Frankfurt stroke London session. So I used to say, yeah, whatever you do, you've got to wait for 30-minute, or because a 30-minute 3CR will be a 5-minute trend. But now we have to apply lots of other things. We've got divergence here. We've got this demand here. We've got a low time frame 3CR. It could even be a 5-minute 3CR. But that's the important thing. We've got the trend in place. I can clearly see that low, high, high, low, higher, high. Once again, off of demand, and we can see the divergence there. We know we've had that massive run down to test this, to find liquidity. So you just got to then apply common sense and say, right, there's lots of other things on this chart as well that I should talk about. We've got the Asian range broken through, ready for a retest. It didn't hold the Asian range low. Oh, sorry, I do apologise. The Asian range low happened as a result of this move down. That's the Asian range low. I'm talking about the 4-hour low here. The 4-hour low that finished at 6 a.m. Got broken through, came back and tested it there, broke it through it again, created the Asian low, and then we've come back and broken back through the 4-hour level. We're above the 34. Remember the little line I talked about on this 5-minute chart? We're testing the 89, but that's where you have to apply discretion once again, because, you know, in a massive downtrend, we want to see the 89, all that I talked about in the previous video to this, but in a fast reversal, we have to apply discretion. And notice I took 8 pips out of this trade. It actually went far more than that, 3 times that, in fact, probably about 25 pips. So, and you'll notice in virtually all of my trades, they all go short of the ultimate target because, as I mentioned in a tweet earlier, I prefer to take little chunks with big money, if you like, out of these trades rather than use a pound a pip and go for 50 or 100 pips and spend all day wondering whether I've chosen the right trade. Give me £10 a pip and a tenth of that, and you've got the same money at the end of the day. Far less stress as well once you're confident with your method. So that's it. Sorry to go off topic, Katie, but that's what you have to do. You have to tick your boxes. Am I at massive demand? Am I looking for a reversal off of massive supply, a sell trade? Am I at the right time of day? As I mentioned at the first part of this video, I thought this was going to run out of steam to the upside. Massive downtrend. This, after all, this is just profit taking, a little pullback at the moment. No reason for it to go miles and miles to the long side. But again, I don't want to be shorting this either, because that's what all these traditional 100-year-old patterns are. Wedges, descending wedges, triangles, all that lot. That's all we're looking at all the time. But all it really is, those patterns, is the pattern of buyers and sellers and when is the best time to be in the market. No momentum long. I'm not going to talk about any more what this may and what whys and wherefores. The answer to your question has just been answered, hopefully, Katie. So again, screen time. You know, you've got to watch these things. Don't try and trade them. If you get too stressed out trading all of them, just watch and learn from them for a week or two, and then start to apply your knowledge instead of perhaps being blinkered by the stress of being in and out of trades. Just sit back for a whole month and just chill out, watching and thinking about what might happen. Personally, I find it easier to test these things and trade them even on a demo account, but not getting all stressed up about it. You know, just accept if you make a mistake, you've made a mistake. You know, we all make mistakes. Accept it and learn from it. So, sorry for a bit of a preach. Thanks for watching. Have a great day. As we can see, that M15 did exactly what I thought it would probably do at this time of day, which is why it's always safe to stay out of the trades. High, low, lower, high. We broke that low. We are ranging now. That's what they call ranging, sideways. Thanks for watching.